Joining us here on set is Nicholas Yeo, head of China equities at Aberdeen. Good morning, sir, and it's a pleasure to see you. And thank you for taking the time. I know you and your team are probably extremely busy. So it's funny how we're 40% into the rally, and arguably the level of uncertainty currently about the short term is almost the same level as 40% back. 44 weeks back. Where do you think we go from here? Like how better off are we at this point if you hadn't gotten into this rally?
I mean, by and large, I would say that the easy money is more or less closer to the end of it.
Okay.
But then again, of course, you can argue on the flip side, right? That's why the uncertainty is so high. On the flip side, you will say that, yeah, it may not be trading at a big discount to the historical average. But then when you look at EM, the emerging markets, look at some of the Asian markets, we are still a good discount, right, to our neighboring countries, sure. especially India. Like EM ex-China is 16, 17 times.
Or half of India still.
Yeah, China is much lower, right? But then if you look at the rally that we saw yesterday, even in the mainland, Hong Kong was different. Right? Hong Kong was more or less, you can call it whitewash, that everything was down. But when you came to the China yesterday, as in mainland China, there was also disparity. And people thought that, everything will be limit up, but that did not really happen. Of course, there was the NDRC that caused that to be, to bring forward that disparity. Yeah. So people are becoming more selective in terms of what they choose. I would think that that's healthier, and it's probably the slow bull, in the literal translation from Chinese, the slow bull market is what the government wants as well, and so there's some tempering from the government in a way. If you want to read into the conspiracy theory behind the meeting, right? Which there are a lot. Yeah. But by and large, looking just at not putting aside all the policy, just look at the market itself. The overbought signal is there. That's why it is prone to consolidation, and it is welcome, and we would like to see some of that. Otherwise, it's not healthy as well.
Are you still expecting more fiscal measures to come through then in the next few weeks or months? Or are we likely just going to stay in this range if we don't get any more new details?
I think the base case is still to follow through, right? I mean, it would look very bad if there was no follow through. So everything is like, the expectation has been built in, and if there's no follow through, it's not just affecting global investors. I think the key here is that the domestic investors are also in the market right now, right? People are opening an account and they do not deliver. The credibility issue might be back again, right? Because we have many false dawns. Can the government afford another one, right? I mean, part of the stimulus, if you like, the rollout of all these aggressive stimulus was also the social unhappiness, right? If you speak to people on the ground, people are not finding jobs, wages are being cut, people are not happy. And still not delivering. I think there is a lot of frustration if that happens again.
Yeah, I mean, our colleague in Singapore, Mark Franfield, had been emphasizing an important point this week that they can't get it wrong this time because of the false dawns we've seen, and certainly that the tone and some of the sort of the new measures that they put in place, to your point, liquidity in the market, do seem to suggest they've turned the page slightly on that note. I guess my question is, has the market re-rated enough? Because something that goes up this quickly, conventional wisdom tells you, could reverse as quickly. But I'm wondering whether or not we've re-rated enough to at least a higher low moving forward. Can we assume that we're now trading at a higher range?
I think you brought a good point. My second point, the main point I want to convey is that the liquidity has come back. And we have gone from zero to hero in a very short time. I don't think it's the government interest to see the market going hero to zero in a very short time as well. So in our view, I think the liquidity, as you say, will stay much healthier. Anything above 1 trillion renminbi in China turnover is healthier. Right, that broadens the market. We talk about Magnificent Seven in the US, but what about China? It has been very narrow as well. It has been difficult, especially for fund managers like us who are not just selecting one sector. We are selecting stocks from many sectors, and the liquidity should be healthier. And I don't think it's the interest, like you say, right? It's not in the interest of the government to revert back to ground zero again. And otherwise, you just look very bad on, the PBOC and everyone coming out with all these monetary stimulus, and there could be fiscal stimulus as well. So that's where we are. We should settle at a higher liquidity level, and that will be much healthier. Yeah.
Everyone was pretty shocked by this rotation out of 8 shares to the domestic markets. Do you think that can continue, or that there is a bit of a, I guess, assumption that A share market might benefit more from some of these measures?
Yeah, that is still the base assumption. So there could be some of the rotation back, sell H, buy A. But there's also one important observation that people have to make, that before the A share rally, the H share in Hong Kong has been brewing on the surface, right? It has been doing better than the A. So what happened yesterday in H in Hong Kong, it could be a prelude to what could happen in the A further down the road, right? I do not know when. Is it going to be 1 week or 2 weeks? But something like what happened yesterday in Hong Kong could be, hopefully not the kind of magnitude, 9% or 8%. Hopefully there'll be some of that correction coming in to the A share market. And I might sound bearish to you,
right,
but like I say, markets never go up in a straight line, and it's just not healthy. And it has to have some correction so that it can build on a higher level, like you say, a higher base, rather than up and down like a roller coaster. So that is something that we prefer to see. And but coming back to your question, I don't think there is a complete, a single trade, sell H and buy A. Yeah. This could be H because it was earlier, so there could be correction. Right. And this will be a precursor to what could happen in A share as well. So it's a matter of timing, yeah.